Okay, guys, welcome back. Welcome back. So today I'm just gonna jump right into it. The introduction of stocks. So I am doing day trading, and there are different types of ways to trade. But I will be focusing on day trading. So if you need other insights, I could probably look it up for you on Google and give you some insights on that. But anyway, so let's get started into this. So, like I was saying, I was listening to multiple audiobooks on investing, and one of them specifically was just talking about stocks. And they went from the basic, telling you even how to open an account, what to do, which button to click. And I was just listening to the audiobook and I was like, this guy is very thorough. He deep dived into it, but it was very helpful. I've been listening to like a lot of YouTube videos and stuff like that, and trying to understand like the history of stocks. Like I said, the last time I got into it a few years ago, just kind of dived into it. But this time I wanted to know the background, the history, and how stocks even came about. So I did some research on that, and was pretty content with it. Now, one of the things that I found out was investing in stocks, especially long-term, for the long-term investors mostly. The stock market is always on the upclimb. Even during bad times, sometimes it would take time to recover. If you could wait it out, you'll win, right? However, sometimes it could be a long stretch. Some people back in the days apparently never lived to see a return because that stretch was so long. But anyways, let's get into stocks and what exactly is a stock, right? So according to Investopedia, let me look that up because I did copy and paste that here, I think. Okay. So according to Investopedia, a stock is a form of security that indicates the holder has proportionate ownership in the issuing corporation and is sold predominantly on stock exchanges. So in other terms, basically, the stock is you owning a fraction of that company. So when a company opens up, right, their initial public offering, IPO, they issue out a percentage of their company. So let's say they'll issue out 25%. Because they're trying to raise money for that company so they could do more research or invest more in a company or whatever it is. So they'll throw out 25%, which stock traders like us, that's what we're trading back and forth, and according to basically the prices and all that stuff. Now, one thing that I found out, the main thing that drives the stock market up and down, the main thing is emotions. The emotions of people. That's the main thing that drives the stock market. If they think that it's going down, then people start selling, stock market drops, depending on the kind of news that they hear. If they think it's going up, stock market go up, depending on the kind of news that they hear. But it's all about how they feel about it for the most part. Now, of course, some things, you could foresee based on, where they're going, the company is going, like Apple is a big one, you could foresee that. But a lot of like day-to-day trading is all about emotions. So one of the first thing that they teach us about is how to control our emotions in the stock market and preparing for that roller coaster, which when I went in, I was not ready for that at all. Okay, so anyway, so you as a stock, when you're buying a stock, you're owning a fraction of the share of the company. Now, they have different type accounts that you can, trade under, right? They have cash accounts, margin accounts, and retirement accounts. Now, for the cash account, it's not really ideal because you have to wait a long time for your trade to settle. So basically, if you trade today, it's your cash, but if you trade today, you have to wait 2 days to get your money back, and then you purchase again. You're not able to day trade and go back and forth like you would want to. So that's not ideal. That's not the one I'll be doing. Margin account, you trade immediately, right? The margin account and leverage. The margin accounts and leverage accounts, they offer up to 4 times the amount that you could trade. So they give you more money that you could trade with. I don't recommend those accounts. I wouldn't take it, is what I'm saying. I just want to trade with my own money. I don't want to take them kind of risks. All right, pattern day trader, which is what I consider myself, pattern day trader. So that's also one of the accounts, which, that's what I'll be trading in. And also retirement account. I'll also be trading in a Roth IRA. That's one of the retirement accounts. And then you have the IRA and the 401k. So the 401k, of course, that's like with a job, like if you have a job and you put money in there, and the company also match a certain percent of whatever you put in there. And then the IRA is a regular, it's an account for people who make over, I think 250,000. So it's an account. The difference between a traditional IRA and a Roth IRA is that the traditional IRA is for people who make over $200 and something thousand or 250, and it's taxed when you withdraw the money. So it's taxed when you withdraw the money. The regular traditional IRA, when you withdraw, it's taxed. When the money goes in, it's untaxed. But you could trade in that account too. But with the Roth IRA, for people who make less than 250K, don't quote me on that, it's after taxes, but you can only put in up to a certain amount. Right now, for anyone under 59, it's up to $6,000 a year. So you could put $6,000 a year in that account, and you could trade in that account. You could do long-term trades, buying into a company that you feel like is gonna, go up long-term, or you can do day trading, which is what I'm gonna do in that account also. I'm gonna day trade in the Roth IRA. And this is one of the things that I learned with day trading in the Roth IRA, or trading at all. With the Roth IRA, whatever money you put in your $6,000 for the year, right? If you trade and you make profit, whatever profit that you make is tax-free. You don't pay any taxes when you pull that out. Now, of course, there are penalties if you pull it out before you're 59 and a half. But this is also what they don't tell you. And don't quote me on this, look it up. But if you withdraw the money, let's say you have, I don't know, 500,000 that you need to withdraw real quick to take care of something. If you withdraw that money for that year and put it back in the account before the rolling year, you don't pay any taxes or get any penalties. Get any penalties. But ultimately, it's good to trade in a Roth IRA because your money will be tax-free at 59 and a half. Whatever you pull out of there, whatever you make, millions of dollars, if you make millions in this account, trading, investing, long-term, short-term, you withdraw it, tax-free. But anyways, all right, so that's it for the accounts. Now, let me see here. So I think that's what I'm going to do for now, just introducing that part. But that one that I said about the Roth IRA, that's the money maker right there. That's one of the things we're not being told. And a lot of people, by the way, who make over $250,000, if that's the amount, that have to put it in the traditional IRA. What they do is just put it in the traditional IRA, and then they just transfer it over to the Roth IRA and trade that money and invest that money and build on that money and then withdraw it tax-free. This is how they're making money with their investments. At least, Anyway, so, all right, so that's one thing that I found out. And I think that's a big, big deal for investors. I think a lot of us, little investors just coming in, we don't know any of that at all. And I think that's a big deal that we're trading in a Roth IRA account. All right, so I think that's just what I'm going to cover for now. And yeah, so I'll talk to you guys tomorrow. I'll put something together tonight and we'll talk tomorrow. And of course, if you have any questions, post it down in the comments, or you can correct me if you could find the information that I'm not too sure about. Just put those in the comments, and so I can also know, because we're all learning together, right? So thank you guys so much for tuning in, and I'll see you soon. Bye.